Hello investors, it's Zil from Equitymaster bringing you investing insights to make investing simple and easy to learn. To stay updated on investing trends and the latest developments on Indian markets, don't forget to subscribe to this channel and like this video. India's power transmission sector has never been more dynamic. What was once a space dominated by a handful of legacy players has now evolved into a complex ecosystem. Big players like Torrent Power, Techno Electric and Engineering, Sterlite Power Transmission, ABB India, among others, have ramped up their activities. But if you look beyond these names and dig a little deeper, a new group of emerging companies operating in the same ecosystem, chasing the same megatrend, are on a faster growth trajectory given their size. These are under-the-radar companies, often not discussed much in public. As India accelerates its capex cycle, upgrading its transmission grids, expanding renewable capacity and fortifying industrial corridors, a wide range of small-sized companies involved in the transmission ecosystem are set to benefit. Today, I will talk about 5 such companies. Before we move on, please note, this video is for information purposes only. It is not a stock recommendation and should not be treated as such. There is no opinion or view on any stock covered herein. With that disclaimer out of the way, let's get started. First on our list is Vikran Engineering. In a market dominated by heavyweight, Vikran Engineering is that underdog quietly gaining ground in the transmission EPC space. The company operates across power transmission, high voltage substations, water infrastructure and even rail projects, essentially all the areas seeing massive government and private sector spending. In FY23, it clocked revenue of around 5.3 billion rupees. By FY25, that figure had jumped to roughly 9.2 billion rupees, a 3-year CAGR of about 32%. Profits have risen from 430 million rupees to 780 million rupees during the same period. The company's EBITDA margins hover around 17.5% with PAT margins of roughly 8.4%. Return metrics are healthy with ROCE around 23%, ROE near 17% and debt to equity a little below 0.6. The recent dampened performance in its stock price was largely due to the Q1 earnings. In Q1 of FY26, it reported a dip in the net margin around 3.5%, likely a temporary blip in execution. At a price to earnings multiple of around 22 times and price to book of 3.8, Vikran isn't a cheap stock, but it's in an early discovery mode in the transmission sector. The company's focus on engineering, procurement and construction projects for power, railway electrification and water infrastructure, combined with its asset-light business model and presence in solar PV projects, gives it a competitive edge. Going forward, Vikran Engineering plans to speed up the executing while keeps its working capital under control. The company was recently listed on the stock market and it saw attention from investors like Ashish Kacholia, Mukul Agrawal and the Wealth Company. Second on the list is Supreme Power Equipment Limited. If you believe India's power infrastructure is only halfway through its upcycle, then transformer manufacturers like Supreme Power Equipment are in a sweet spot. Supreme Power makes a wide range of oil-filled power and distribution transformers essential for utilities, renewable projects and large industrial clients. Its diverse product portfolio includes power, generator, windmill, solar, isolation and energy efficient transformers with voltage capacities ranging from 16 kilowatt ampere to 25 megavolt ampere by 110 kilovolt. The company operates a 17,876 square meter facility in Chennai. In FY25, the company posted revenue of about 1.1 billion rupees, up from 750 million rupees reported in the year ago period. In Q1 of FY26, it posted revenue of 382 million rupees and a profit of 44 million rupees, maintaining double-digit margins even after a seasonal slowdown. The company's ROCE is around 28%, the ROE 22% and it carries minimal debt, appealing numbers for a mid-sized manufacturer. As of Q1 of FY26, the company's order book was over 1 billion rupees, with notable orders including 159 million rupees for power transformers, 27 million rupees from Munnar Tea Estate, and 36 million rupees from Tamil Nadu Transmission Corporation Limited. As India upgrades its transmission and distribution network and integrates renewable capacity, demand for transformers is set to rise steadily. Even modest contract wins or export deals could change the scale of its business quickly. Next on the list is Indigrid Infrastructure Trust. As India's first listed power transmission InvIT, Indigrid owns operational assets, transmission lines, substations and related infrastructure and earns regulated returns from them. It's not chasing breakneck growth, but instead delivers steadily predictable cash flows. In FY25, Indigrid generated revenue of roughly 34.4 billion rupees and profits of 4.1 billion. Its asset base is substantial, valued at over 260 billion rupees. Indigrid pays regular dividends, offers potentially inflation-protected cash flow, and has limited execution risk compared to EPC companies. On the flip side, return ratios have lagged around 6 to 7% and the growth rate hasn't been high. Fourth on the list is Pix Transmission Limited. Pix Transmission doesn't make electrical equipment. Instead, it manufactures mechanical power transmission belts and conveyor systems used in industries worldwide. In FY25, Pix delivered revenue of about 5.9 billion rupees, up 18% year-on-year. Net profit jumped 36% to 1.1 billion rupees and profit margins climbed above 19%. The company's debt has also gone down from 326 million rupees to 235 million rupees. In Q1 of FY26, investors had a concern about slight slowdown, which resulted in a 12% revenue dip sequentially. The company believes that's more about the timing of orders than structural weakness. Last on the list is Divgi Torqtransfer Systems Limited. Divgi Torqtransfer System is a precision engineering company that supplies drivetrain components to global OEMs. The company is India's largest EV transmission manufacturer. It specializes in crafting drivetrain systems and related transmission components for a diverse array of vehicles spanning passenger cars, utility vehicles, commercial vehicles, etc. It operates in the sweet spot of the India's automotive future, the transition from internal combustion to electric. Coming to its financials, in FY25, the company's revenue came in at around 2.2 billion rupees with a PAT of 240 million rupees. That's down from the previous year where it reported 2.5 billion rupees in revenue and 530 million rupees net profit. But in Q1 of FY26, revenue and profit witnessed a rebound. The company is investing in advanced drivetrain systems for electric vehicles and dual clutch technology, both in demand globally. Divgi may not yet have the scale of big transmission players, but it has the DNA to evolve into one. Overall, India's growing energy demands are pushing the power sector into a new phase of expansion. At the heart of this transformation is power transmission. Power transmission companies are responsible for delivering electricity from generation plants to substations and then to the wider distribution networks. With the push towards renewable energy, electric mobility, and stronger grid infrastructure, the role of transmission is becoming more crucial than ever. Investors should evaluate the company's fundamentals, corporate governance, and valuations of the stock as key factors when conducting due diligence before making investment decisions. That's it for today. Don't forget to like this video and share it with your friends and family and make them as smart as you are. This is Zil from Equitymaster. Thanks for tuning in.